Good day traders, Stacey Burke from Stacey Burke Trading. Just a short quick video on how you can use the US and Asian sessions to help identify order flow and your demand and supply levels prior to the London Open. So we're going to just go through a few days, and I've got the 5-minute charts up here. There's a 20 EMA on the chart. I do use the 1-hour charts to help identify these levels, but today I'm just going to show you some really simple ways to look at this and identify A, potential levels of supply and demand, and B, the order flow, and then how you can use that for the London Open. So prior to the London Open, we want to look at the US market, and going into the close, we see that the US market clearly found support around this level. I'll just put that here. But we also see that it demonstrated some level of resistance up around the upper bands around 4206 level. Now clearly it would appear that the order flow towards the end of the session was bullish, but we also can see that the market was range bound. Now what's important when we go into Asia is that we're looking for some indication of bias in direction from a breakout. So we can see that in that first few hours prior to the Asian Open, we see that there was some order flow that was bearish. The market consolidated into the open, and then as the Asian Open opened up, it again demonstrated order flow that was bearish. We see that the market has some buying activity, but very weak, and again the breakout was south. So what we want to do, or what I would do, is I will typically take my rectangular box and I will draw a rectangle from where the breakout occurred. So I'll go up to the high of where the order flow started, and then have it go to the low prior to the breakout during Asia, and that's my box for supply. Now again, this is we're looking at one time frame here, but you can use your larger time frames to demonstrate potentially the overall bias. Now if we were to do the same thing down here, again, because Asia has not demonstrated that until the Open of London, but we see these long tails. Now what I would look for, now again, you know, I've said this before, I like to look and wait for an hour of trading roughly to see where the market is giving me an indication of order flow. So as we can see here, we see it in Asia. If nobody was selling in Asia, we see order flow continue into the Open of London. It resumed into the very first hour of London. So now we know that the order flow is down. And even if that was to reverse, we want to be looking at taking trades somewhere up in this area. Now, the market still has to prove to us that it's going to auction up here. So we see obviously probably a news candle appearing here, large wicks that does the entire range, but then the market auctions up and does 3 thrusts back up north. And you can see this bear bar that occurred off of supply and gave us an opportunity to short that market. Now traders may have been looking to trade the range, so they could take a position up around 4185 area or off this candle. And the range itself is only about 20 pips. But again, what we're looking for is for the market to demonstrate some bias with order flow. We've clearly made a decision that the order flow for the day was definitely down, so we're looking to be selling up high and either going to break even and holding on to these trades, or being prepared to just build a position until the market finally breaks. Now it hadn't during any of this time frame given us any indication that that supply was weakening, but we could see by the tails that there was potential support above the 4140 area and below 4160, but clearly the selling was dominating the market. Every time the market approached that 41 41.80 level, 41.75 and up, there was definitely selling pressure involved. So again, we go to the next day. And again, we just want to look at the U.S. session so we can clearly see that there was a three thrust pattern towards the end of the U.S. session. Okay, so traders may be thinking that's the end of the line, but then before the Asian market, we see it again drive north. Lots of buying pressure. So we let Asia trade. We've come along somewhere after Asia's in between Asia and the London Open, and we're just looking to establish our levels. So we see that during Asia, the market appeared to possibly find a level in here, middle of the range, at 42.65 roughly, where that buying pressure sort of died out, and then we saw some weakening. Okay, now we're not saying that that's bearish order flow, but we can see going into the London Open, the market is trying to sell off. So we see London sell off, but clearly we are in a bullish situation here. Now we go and let the market trade for the first 55 minutes, and again we can see that the market is giving us a chance to buy, and there's a range where we know there's selling up above. So just an example again of supply and demand in a very strong bullish market of trying to establish a buying area and an area where the market could meet resistance and supply. So we see supply come into the market. Market tries to buy up again. It needs to find more volume, and it auctions back down into the U.S. session. It's clearly now finding support or demand below 42.63-65 area, and we can see the market is supporting it up here now instead of below. It's making higher highs, and eventually the market proceeds to auction through. So again, look for the indication of where the market has come from in Asia and in the U.S. session. And then during the Asian session, we want to see a clear indication of some sort of bias. Now we see that the market had definitely, let me just put this indicator back on. We can see that the market definitely found support. So if we look at it on a blank chart, as Asia opens up, we can even go back into our U.S. Asian Open, and we can see that the market broke out from that level at around 42.20 and then proceeded to auction up from there. So use your Asian sessions, use your U.S. sessions, look for the order flow. You can start to dominate and see where the market is breaking out, finding support, and where that support will eventually dry up. But be clear, when the market opens for London and in the US, you want to know where that bias is. That's the highest volume, highest liquidity times. And when the market builds up positions, if they're building them up, you need to know and identify those levels where the banks and other large volume traders are going to be building positions. Hopefully that helps, traders. Stay disciplined, start identifying these zones of supply and demand, and may the markets go with you.
Hi traders, it's Stacey Burke from Stacey Burke Trading. If you haven't done so, please head over to my website at staceyburketrading.com. I create updates on almost a daily basis, and I would love for you to receive them. Just click on the blog. If you want to enter your name and your email address, I'll send you my free audio program, the 7-Step Daily Routine for High Performance Traders. This is essential knowledge for all traders in all markets, and this is for helping traders to master the market with discipline, confidence, and a winning mindset. I appreciate all your feedback and comments. As always, traders, stay disciplined, and may the markets go with you.